Definitely. I'll go over it, Unease. I'll go over it for sure. And let me just mute this. All right. So let me go back. Okay. So when you picking out this setup, right? Because we know, right? We got this area right here and this area right here on the lower time frame, this order block and this order block. Those two areas should be your primary concerns, right? If we see price in this area, you should, that's where you want to start looking for your entries, right? And in a situation where we have two that's really, really close together, you start with your partial order up here, heavier order up here. For the partial order, your entries here or anywhere in between down to the low, your stop loss is pips below this one. Same thing on here. Entry can start right here into the anywhere in this area, stop loss below, or you can put it below here because we got a lower low right here, right? In this case, I'm gonna be honest, I jacked this trade up. I took it in my live account and my demo account, and I put a trailing stop on this. And as soon as it entered, it went into profit about 140 something pips. But I was using a trailing stop automatically. And as soon as I hit 100 pips, it put me at break even. And then it took me out at about 40 something pips. And then it just pushed down slightly, pushed down more. And then it just ran. So I'm not even in this trade and I'm mad at myself, but it's all good. In my demo account, I set the trailing stop, but I set it after it moved down. So, mistake, but it's all good. And I wasn't willing to get in it unless it did some stuff that it didn't do. And I'll talk about that too, because I'll talk about why I didn't get in it and how I plan on getting into it later. But
And that's a real quick question, bro.
yeah.
With the trailing stop, I tried to use it a couple of times, but I'm trying to understand what it means by points because I put it in one time and it just closed me out immediately. I thought 15 points was like 150 pips or whatever, or 15 pips away, but it took me out immediately. I guess it ended up being like 1.5 pips, or how does that work right
Every
there?
broker has different pip values. So you got to find out like what it is for 50 pips or 100 pips based off of your broker. So, if you've been using one broker, you switch to another broker, they might measure their pip count differently. And if you're using like if you're using FTMO and you're trading SPX, you measure your stop loss in 100s, in hundreds, right? So a 50 pip stop loss is 500 points. I think it's points. Yeah, 500 points. 100 pip stop loss is 1,000 points on MetaTrader. And I think that on US 30, 50 pip stop loss is 5,000 points. And then 100 pip stop loss is 10,000 points. So you got to measure it using that the crosshair tool on your account.
Okay, cool. I just wanted to ask. I thought that's how it worked, but the reason why I asked, um, I thought I had the idea of how it worked, is because I didn't see a line. I know the stop loss when you put it in, you see the line for the stop loss, but the trailing stop, I didn't see any. I thought I would see a line moving, so I wasn't sure if it really was counting it that way when I put it in. So it sounded like
Yeah, yeah,
this.
yeah.
So how when you put it in, does it show a line or no? You just know
When
what.
you put the trailing stop in, it doesn't show until it gets triggered.
Okay, appreciate
And it'll just be stop loss moving along with the trade. It won't be nothing. It'll just look like your regular stop loss, and it'll just follow it up and down.
it. It
Got it.
will.
Yeah,
It
it'll
will.
follow it as long as you're in profit.
I thought I didn't see a line. I was like, what is going on
That's
here? I
because
just
you probably put it too tight.
okay.
Yeah,
I'm gonna make a video next time.
I'll show you. I'll show you.
Okay, cool. Appreciate it.
Yeah, yeah. But let me just so once you see this area and you get into the trade from here, this need to be your primary target, right? Because this is the high, right? And if we don't get to this high, or if we fail to reach this high, that means you need to watch for a move like this to the downside, because that could be the retracement. And it may or may not mean that the move is done, but if it comes down to retrace, that might actually be an additional entry, right? So that it kind of depends on what's going on. But we had a lot of bullish momentum, and that kind of pushed us straight through it. And now, moving forward, you want to look into that imbalance area that I mentioned, where we trading into right here, right around 47.27 up to 47.77. And then to answer Anais' question, can you go over how to identify order blocks? It still throw me off. Let me open up this other chart right quick. I feel like I always answer this question I feel like I'm the how to find order block person. Like everybody love asking me that question, but I don't mind. I don't mind at all. That's why I got it drawn up already. So I don't have to keep drawing it up, right? So basically, your order blocks, the best way to describe them so that anybody can understand this, right? The best way to understand this, right? So you could be, depending on what the trend in the market is, right? Your order blocks are going to be the last down move or the last up move given the direction of the market. So if you're in a downtrend and you see a down candle, it's the last down candle before the move up, right? It can be a single candle like this, or it could be a series of candles. But if you looking at this move right here, let's consider this like a range, right? And let's think about price was moving all the way down, and we got a down move, this last down move right here in our price movement, right? That last down move is signifying institutional buying. right? Last up move is going to be the move you look for if you're looking for a downtrend, right? And it's going to be a single candle or a series of candles before the down move. It could be either or, right? In Kim's Discord, people talk about order blocks with your name. I have seen so many times. I don't know what you mean by that, Anna. And just think about it like if I'm moving down and I see a down candle, once I see the last down candle before the move up, I know that that candle could potentially be an order block, or that series of candles could be potentially be an order block, right? And the higher the time frame that you see the order block, the more valid it is, right? So if you find an order block on the monthly, you know that that order block has a very high probability to be a functional institutional area of resistance or support. And the lower the time frame that you go in, you'll see that that single order block becomes a cascaded order block, right? So there inside of that, the higher time frame order block, you'll have smaller order blocks within that order block. And that's how you can make your entries more precise. So if I'm looking for a long-term entry and I see that on the daily, and see the way you have to do this is the higher the time frame is, the higher the time frame is, the more that's where you get your bias from. That's where you understand where the market is actually going, right? So like this area right here, this is a single order block, right? Right here. So now I already know that if I'm looking for a long-term trade to intermediate term trade, which means I could be in this trade for weeks or months, because I'm looking at this on the daily, I know that this area right here is my last up move before this down move, right? And you know that it's there's a couple of ways you can confirm that this is an order block, right? You see the low to high right here. And then once you see that low is taken out on this candle, that should be light bulb. Ding, ding, ding. This is an order block, right? This is an order block, right? This is an order block. Anytime I see that, or anytime you see that, you need to already annotate this area right here. It's yours to annotate, right? And that's a bearish order block. And that is on the daily. So now you seeing my secrets, right? You see my secrets. Like, so now when you see my charts, you know what this D minus OB is, right? That means that's a daily bearish order block, right? And then after you annotate this, you got 3 levels inside of that order block, right? You got the low, you got the middle, and you got the high, right? And at each one of these levels, this is where you need to start considering entries, right? You'll consider, once you see the low taken out, the first place is going to try to come back to is the low. What happened right here? Wicked it, dropped, right? Then if it keeps pushing up into it, where is the next place you need to consider? At the middle. This almost came to it. What did it do? Drop. This came to the low. What did it do? It dropped. This almost came to the low. What did it do? Drop, right? If it comes to the high, what do you expect it to do? Drop, right? And sometimes it doesn't, but you're close enough now to the actual stop loss. Now you don't have to be in 90,000 pip drawdown because you're closer to where the actual stop loss is that the banks are using, that the institutions are using, right? You're using the same stop loss that they would use, you know? So now what you do is after you see the low taken out, you see price return, you go to the lower time frames, get your entry. Return, go to the lower time frames, get your entry. Return, go to the lower time frames, get your entry. It pushed up above that. That's cool because our stop loss is all the way up here. We don't have to worry about this. Go to the lower time frames, get your entry. Come up to the low again, go to the lower time frames, get your entry. Now, this is on the daily we seeing this, right? But let's drop to the 4-hour and go back to that same area. Let me see. I did that wrong. Give me 1 second. Let me reset this. Right. Okay. This look a little crazy because this is all like studying stuff right here. But now we on the 4-hour, right? This is the mark up, same mark for our daily order block right here. Now we can refine it even more, right? Last up candles is taken out right here. Guess where we have order block starting on the 4-hour right here. We don't even have to go no lower. Why? Because look where it's bouncing off of. It's 4-hour order block. Right? The 4-hour order block low is right here. You already know about the daily order block right here, right? We got a wick. The order block low on the daily is 152,623, right? The entry over here is 152,641. This didn't even move a whole pip away and it just tapped it and ran, right? And see, that's another reason why trading like this gives you a better opportunity is because even if you were wrong with where you entered, you still get the opportunity to get in and get out of the trade and profit, right? Even you got in here, right? Even if you looking at the high on this, the high on this trade is 152,852, right? The low of the 4-hour order block is 152,868, right? Just missed it. But if you already know that it's inside of the order block, you can still have this setup ready to go. Because if it trades to the low, you know it's got to trade to the middle, right? And zoom in over here to this area. And we go to the 15-minute. Go to the 15-minute. Oops. Go to the 15-minute. Hang on. Where is it? 52. Where'd it go? Hang on. uh 15-minute. I see it. It's over here. Thought I had it. All right. How can I do this on the 15th? I'm tripping today. Yeah, I'm tripping today. My bad. Yeah, I'm tripping today. So that's September. Okay, cool. So September. Forgive me and my slowness right now. All right. We almost there. I think. All right. So this about okay. So here. Nervous? I don't know. I don't know. And probably.
Are you trying to find a specific number, Corey?
Yep.
Couldn't
Don't
you just
worry.
drop the number? I mean, draw a line and then put in the coordinates for it?
Don't worry. I got it. I was just being slow right now. My bad. Okay. So right. So now we got our 4-hour and our daily order blocks already annotated, right? Got those annotated. And now let's zoom in a little more so we can see how we enter. Okay. So now we at the low of this, we at the low of the daily order block, right? Same rules apply. Same rules apply, right? We can see our rejection. You can use any kind of entry technique once you at this point. You can use this candle as an order block right here. Last up candle. Cut the head off. and we drop. Soon as we trade below it, we know we come back to it. High, middle, and low, we drop, right? Same thing over here. This a little choppy, so you can't really use this last up candle because it trade through it, right? But even though it trade through this last up candle for the first hit, right? It traded down below, traded back up to it, and then it dropped, right? So even if you had a drop, you would have had time to put your stop loss in profit, or you could have adjusted your trade by then, right? Last up candle right here, drop below it. It really didn't come back to this one, but you already got the opportunity because you got wick rejections up here. You could take this trade based off of candlestick patterns right here. You have wick rejection, wick rejection, wick rejection, enter your trade, and it dropped. And you know you can get in this trade because you're near the middle of the daily order block and you are near the 4-hour order block. You can almost set your buy limits and sell limits at these areas, right? And so the moral of it all is, let me look at this. We can do a ghost feed. That's ugly. So we're not gonna do that. You have, for a bullish order block, you're looking for downtrend, you want to see the last candle or last series of candles, right? You're gonna look for price to trade above this last candle, make a new high on the short term. Then you're gonna wait for price to return to it. Once you see the price trade above the last down candle, that's your signal to know that this is possibly an order block. And once you know you possibly have an order block, you need to understand these 3 levels: high, middle, and low. High, middle, and low. That's for a bullish order block. Right? High, middle, and low. Right? And you also need to understand that based off of the time frame you're looking at, there could be also smaller ones in here as well, inside of here, given the time frame. Right? And you're gonna look for price to come back down to these areas, right? Now, that's for a bullish. For a bearish, it's gonna be the opposite. So you're gonna be looking for price to be making a significant up move. Then you're gonna want to see the last up move near a high, right? Last up move And then as soon as you see that you get price to trade below it, you're looking for the return into that. Then you want to see expansion. You get your 3 points of contact, high, middle, and low. That's where you look to enter your trades, high, middle, and low. I like 50%. I don't mind the low. I don't mind the high, but preferably 50% is the give me all you got area, right? High can be tricky, but you can still use it. You may have to stretch your stop loss a little bit. And look out for that, right? But the main thing about this is it's not just looking for to add on to this, it's not just looking at, oh, it's a down candle. It's a up candle, or it's a down candle and it's at a low. That's not all you need though, right? So now that we understand what it is and how to spot it, now we need to understand, like, where should we be looking for one, right? And where should we be looking for one are areas of high probability, right? So you spot those areas, you start higher time frame, right? I'm gonna go back to I'm gonna go to a clean chart. Let's go. Somebody throw out a pair. Just drop one in there right quick. One that silver. Okay, cool. That's a good one. Silver. What is it? XAGUSD. You just sold it. All right. I ain't even mad at that. Understand what's going on, right? I ain't mad at that. Okay. So this silver on the daily, right? And we're looking at the daily. And from where we are, we're kind of in a little range. We got this low, we got this high, and price is just in between those 2 points, right? So if I'm looking at this chart, I'm seeing that this candle right here, before we got this low and we got this high, but this candle right here is the last down candle, right? And this is going to be my bullish order block right here. Bullish order block on the daily. Because this wick is so long, we already know that on the lower time frame, we definitely going to find some more order blocks near that area, right? Now we can consider high, middle, and low, right? Where did we buy from? We bought from the middle. Look at where those wicks, look at this price level, right? Let me go. Look at this price level. High, middle, and low. Price level is 22,01385. The low on this candle is 22,00700. The low on this candle is 21,9475. If we extend this out, look at how spot on that entry is right there. If we were buying this, right? Once we recognizing this, all we got to do is once we get to this point, drop to the lower time frame. We can set our alert right there at this price level right here, set our alert so that once it gets down there, we can drop to the lower time frame, repeat the process, find an order block on the lower time frame, let price return to it, we take our buy, right? And we know that this is an area that we've had we got a higher time frame or order block, right? We can expect for another order block to be placed in this same area at one of these levels, because you have to have that price, you have to have price rebalanced at some point once you are in this range right here. You have to have price balance back out, right? That's how you know where there will be another order block, because you're either going to trade into an order block, or in another instance, you need to trade through an area of resistance or support. That's why you see this random order block right here. This is an order block too, right? Looks, it don't, you wouldn't recognize it because it's in the middle of nowhere, right? But I'm gonna explain this later. I'm gonna explain that later. But yeah, I'll explain that later. So now we see where it came from. It came from this 50. Last up candles before the down move, you can look at two different instances, right? You can look at this series right here, or you can look at this one right here. I'm going to consider this one right here. And I say that because it holds that same one already. It already holds that. It's got this one inside of it. So high, middle, and low. That's my daily, right? And if you look at this one that I just drew out, right, where is the most of the body for this one? Is near the 50% of this larger one. It's right near there, right? In order for me to get through this big order block, I had to create another one to get to where I was trying to go. So for you to sell this, right, you're selling into this order block right here. And in the larger term, you're selling into this larger one right here. You got an option to put in your stop loss here or here. And if you're selling this right now, you have already entered into this order block right here. But you still got room, right? I would, because we've already traded up into this, I would consider this one and using this for this trade, because this is the most recent one. And we already kind of really use this one right here. So you got this move right here. So we'll go to the lower time frame and look at this. So now we know where the dailies are. we can look at the 4 hour, right? These two candles, you can consider both of them, or you can look at this last up candle. You want to be more precise. That's your 4 hour. Right? Now that we kind of got, we got these, we got this last up candle before this down move, we traded below it. Look at where price is going right now. So if you're selling it, you got to understand that you got room to the upside. You got room to the upside. You at least have to take an account for, since we had the daily, you at least got to take an account for it reaching to this low from a 4 hour perspective. And once you get to that point, 1, 2, 3, low, middle, high, it could come up to any one of these points. There's some other things that you also consider, but I'm not going to go into that yet or now on today's call. A lot of the rest of you guys probably know what I'm referring to. That's the imbalances that's we call fair value gaps. And I see a lot of that on this chart right here that we needed to look at too, but it's already pushed through it. And so right now, what is this? That's your bullish order block. This your bearish order block. And if we go into, if we see price pushing up, we need to start expecting it to fall anywhere from here, here, or here. And if we just draw this out on the whole thing, you got your 50% of the bigger, the two candles. This candle is pretty much right at that 50%. So it makes sense for this to be here if we're looking at this whole move. And it also makes sense for price to push up to this low or to the 50% of the larger time frame. There's some other things I can show you too, if you want to get more precise. Like when you have a point of control, that's what this red line is, in between a order block. That's pretty much telling you where they're buying right there. So if you got a situation like this with a low or a high and a point of control, you can pretty much mark that area and expect for it to come somewhere in this range. The point of control measures the most trading volume at a given price. So if you see this red line, know that at this given price, this had the most orders for that particular day, this particular price. And not buying, not selling, it just had the most orders at that given time, right? So this is a combination of buying and selling. The most buying and selling happened at this red line right here, at the point of control. And in this case, buyers lost control of the market and it dropped. Just like right here, point of control, order block right here, at this particular price right here, the most orders went into the market, buying and selling. Most transactions happen right here. And in this case, it pushed the market up, right? Price traded above this down candle, came back down to it, wicked off of it right here, and we move, right? Everybody understand? Everybody understanding?
Yes.
Michelle, you understand? Anais, Naomi,
Yes, I'm actually, it's just
Steph?
crazy right now.
Okay. Okay. So The other cases where you'll have order blocks and they'll look like before I answer that, Khalil, you said you had a question.
Yeah. Thanks. Peace, bro.
What's up, Mom?
It was back when you were showing your chart. I mean, you don't have to move though. But when you were
Okay.
showing your chart, that you already have prepared for questions on order blocks, and you were showing how it started from the daily, and then you went down to the 4 hour and showed order blocks within that daily. So yeah, I'm just still processing because every time you get on here, bro, it just blows my mind even more. And so the question that I'm trying to I remember the question, but I'm also still processing. And you almost kind of answered it, which reminds me of a statement of one of the great speakers I used to listen to. Always said, answer a person question before they ask him. We were just definitely doing that. So I would say this: you don't show it much now, but when you were first showing me this, you were showing me, and I still use it. And I want to say that I noticed you say you like the 50. I use your Corey fib as I have it, in my template, whereas my entry points are at that 70. And
You
so
talking
once I
about
learned-
this field right here?
No, it was another one where you actually had candles on there. It was one of your live, I believe it was one of your, when you say charts you were looking at that you doing a lot of study on.
This one.
No, it was the one that had candles on it.
My study chart. Hold on. Let me open that up right quick.
And it was excellent, you going over that for me, because I follow those instructions. How you said I set my order blocks up on my daily, then I go down and find them on my 4 hour. And it was beautiful how you showed that how that 50% on your daily was showing an area on the 4 hour that I've been marking up and trading so many charts now. I almost eyeballed it that 70% mark is going to be on that 4 hour candle. And I was just going to actually get you to look at that, but that's not the bigger concern, because again, like I said, I've been using it, and bro, it's like butter. I'm telling you, like it's like butter. And so you even just answered, how do you know which one to use? And I wanted to repeat what you told me, and have you speak to it. You was talking about how where a good order block to use, the one that like, where is liquidity? Where are they going? And that's how you kind of determine which order block that you want to use. But en route to it, you will find order blocks along the way.
Always.
Yeah, man. And
Always.
like, bro, I cannot thank you for this teaching, because again, it's like allowing me to see the market so clear. But in my continuing study and wanting to see it even clearer, can you speak briefly to, because I don't see you use the 70 much. You talk about the 150 spots you like and catching the lower order block. I'm noticing even on that lower order block, if I drop down to a smaller one, it's still, it's just smacking at 70 almost every single time. And even like you showed me, if it decides to go to a higher one or maybe a lower one, it's going to bounce off of that order block in enough time, maybe 50, pips, where you can, take a small profit, or even at least put your stop in break even. en route to the next one. Then it just trades from, I think this was the one, but it trades from order block to order block. My apologies for sounding so convoluted in what I was
Oh
saying.
no, you good. You good. It's all good. It's the first session of the year, man.
But
So
man, just that 70, like I'm even looking at gold because you was doing silver and I went over to gold and I plotted this just now, this order block at the 4 hour, and it's rejecting right off of the 70. I mean, if you look at gold, it's just
let me kind of go over that right quick. I think I can use this because I think I know what you're talking about. But I don't use the 70 and I don't use the regular fibs for measuring the order block. And the only reason why I don't use that is because it's just 3 areas I need to focus on. Outside of those 3 areas, when I'm measuring the order block itself, I don't care, because I know that once I'm in there and I see price responding, it should move off of that area. So when I'm using for me, I got 3 different fibs that I look at. This is my order block fib, right? And I'm so like, I ain't gonna say crazy or nothing, but I don't even really look at fibs as much as I should. And I don't look at them as much because I kind of I can look at an impulse and tell where we are just by looking at it. And it's good and bad, because it's good because I know the levels, but it's bad because sometimes I don't pay attention to the fact that we're at a certain level. But it's 3 fibs that I primarily use. You'll see my order block fibs, and that I only got these 3 on there. Then you'll see the default fibs. That's all the levels of the impulse. And then you'll see me with my entry fibs. And that's OTE fibs, right?
yeah,
And
that's the one I swear by.
this is the one you're talking about.
Yes, sir.
And these have 3 different, these each have different purposes, right? Like I said, this is just for measuring order blocks. This is if I want to get projections of where a move could go. This is where I'm getting entries from off of this one right here. And this is how I would use it if I was trading an impulse for a bearish entry. This is how I would use it if I was trading impulse for a bullish entry. And in a case like this, right, once you see where the moves start, right, that's where you're going to measure from, right? The move started from here, right? After I see this high made right here, and I see that the high was taken out on the impulse and a new high has been made after that, that's where I'm drawing my fibs from, this low to this high. And I'm going to expect for it to return into that level. Let me get rid of this. Do I want to get rid of this? No, I don't want to get rid of that. Hold on. Just gonna move it over. Now, once I realize, okay, this is where the move started, low to high. And once I see that this high, which should be near or at the high of the order block, this is the candle that I'm considering the order block. I see that candle being traded above and then a short-term high made. I'm going to measure that low to that new high, and I'm going to wait for price to return into this area. 618 down to 786, right? And once I get candlestick confirmation, that's giving me my entry. My target would be the high that it made, the 27, negative 27, negative 68, and negative 100 to make a whole symmetrical move, right? And you should, if you got a case like this where it's stacked order blocks, you'll probably have some smaller ones near 50 or near the 100 of the bigger order block. Same thing for a bearish move, right? This is the overall order block. These are the smaller ones right here, right? 50% of the 50% of the higher order block should give you a smaller one, right? Once you see that it's been taken out on the lower time frame and on the higher time frame, you can measure wherever you get the new low, the low taken out on the impulse. Once price return, you can start looking anywhere from here up to here to get the entry. And you just use smaller entries, the lower the entry it is. So if you near the low of the daily order block, like let's say this is a daily order block, these 4-hour order blocks right here, or 1-hour order blocks right here. If you're going to enter here, you need to understand that you cannot use a large order right here because you have the potential to go all the way up here. The higher the market trade, the higher your entry can be, because the higher the market go, the closer you get into the area that it will likely sell off from. And then your goal is, after you enter around this area, you're trading back to initially the low that was made. That's your main target. And anything else after that, that's more Fashion Nova money. Anything else after that, you got negative 27, negative 618, and you expect for a symmetrical move at the 100. Caveat, another note, at each one of these levels, 100, at the 0, 27, 618, and the 100, there will be an order block, an equal high, an equal low, or some kind of imbalance at these areas, at each one of these areas. Every single time, it will never fail you. Every fib level, there is going to be some kind of order block, equal high, equal low, imbalance, or a fair value gap, or some type of institutional move every single time. You can backtest this 80 million times. It's going to always be the case. And it's because of the market makers, they use fibs too. A lot of the algos that trade, a lot of the AI that trade, it uses fib levels to trade off of. Also, you'll also see them at whole numbers, quarter numbers, and half numbers. You always see something at those areas. Equal high, equal low, order block, fair value gap, imbalance, something. You're going to see something. It is a given. Whether or not they use it or not is the question. That's what you have to use price action to decide is, are they going to use this one, or are they going to use one that is somewhere else, right? That's what you have to decide. Your risk and all that stuff, right? So now, said all that to say, we're going to go back to silver right quick. Go back to silver right quick. Okay. When you are trading, right? Dang, I'm trying to remember. Let me see something. Because I don't want to have to draw this over. Cool. This chart right here. Okay. When you understand the smart money, right? You are going to always be at one of these levels, at a premium, equilibrium, or discount, right? And when you're at these levels in the market, you just need to determine if you're in a discount where I need to be looking, first thing I need to be looking for a buy. I need to look for sell side liquidity, old lows, old highs, equal lows, equal highs, order blocks. And what I don't have on there are, other things that I don't have on there. But these, this will get you started. When you're in premium, you need to look for the same thing. You need to be looking for sales. You need to looking for buy side liquidity, equal highs, equal lows, order blocks, fair value gaps, imbalance, all that good stuff. When you're in a premium to sell, right? You are always going to be going from premium to equilibrium to discount, or from discount to equilibrium or premium. You're always doing one of those, right? You're always moving, consolidating, or selling. One or the other, right? Michelle said, you said imbalance. And what else are institutional moves? It cut out for me. Imbalance. Okay, so if you're in a discount, you need to look for buys. You need to look for sell side liquidity, old highs, old lows, equal highs, equal lows, order blocks, imbalance, fair value gaps, and a list of other things, but that's the most important stuff. When you're in premium, when you're in a premium market and you're bearish, you need to be looking for sales, buyer side liquidity, old highs, old lows, equal highs, order blocks, imbalance, fair value gaps, right? That's how you always have to think about it, right? And you need to know where, you got to know where you are in the market, right? If I'm looking at this range right here on silver, I just left discount when I bought right here. So now I'm buying to premium up here. I know where my premium levels are because I got an order block here and an order block here, right? So if we gauge the market, right? And you want to know, like, where am I in the market? Like, am I in premium, discount, equilibrium? Let's find out. You take your fibs, you find the most recent high or low on the higher time frame, preferably the daily, right? I'm going to use the order block fibs because that's all I need. Matter of fact, let's get rid of all of the other drawings on here. This is my most recent high. Low. That's my most recent high on the daily. December to December 15th to December 28th. We haven't traded outside of these two, right? This is equilibrium. That's premium. That's discount, right? Now we know where our range is. This is the trading range that we need to be focused on from here to here. We don't need to worry about nothing else outside of here or outside of here because we haven't done anything, right? It is not a coincidence that this weekly is, guess what? Right near equilibrium, right? Price traded from premium down to equilibrium to discount. Now it's going back to premium to decide once it gets up at premium, are we going to break out from here and move to another level and create and expand this range that we in from here to here to make it even higher? Or are we going to continue into this consolidated range between this high and this low? That's what's always happening, right? Yeah, I'll send the screenshot. I'll send it. This screenshot right here. And then where are we at? Okay. So this is our range here to here. We don't need to go up any further because this is the most recent high. This is the most recent low. Now we know, right? So now that price is leaving discount from this recent low. We need to find our next premium area. This is the first potential area for us to find a premium, right? And we know already we'll use this as our most recent order block because that's our last down candle. We gonna measure this. Right here, high, middle, low. When you have a long wick, just FYI, when you have a long wick like this, sometimes what I'll do is just measure the body. And I'll just measure the body to get more precise because that's where most of the trading area took place. And in a case like this, I'll note where this 50% is right here. And then I'll note where this 50% is right here. This will be my focal point right here. That'll be my focal point. So I got the distance between both of those. So that way I can just dial in over here, right here. And then, so now we know this our premium area right here, the most recent premium area right here. So we just went from discount to premium. And now once we get in this area, we need to drop to the lower time frames, look and see what we're gonna do. If we're gonna reject in here from the lower time frames based off of the higher time frame moves, right? So we can go to like the 1 hour. And we'll see that the same order block that we drew up from the daily, from here to pretty much up here to here, right? We got a smaller one right here. That's near the high of the daily order block. right? The 50%. Guess what? We have order block that we can consider. We got a move that we can consider an order block right here. It's like in between both of those. That's why I took this whole area. Then you got one right here, right? Now, in a case like this, where you have a random order block in the middle of nowhere, it's really not in the middle of nowhere. It just looked like it, right? It looks like it because it's not at a high or a low. But if you scroll to the left, there's one right here. This is a bullish order block. They had to throw a bearish order block to get lower. That's why you see randos. That's why you see randos in the middle of moves. If it's got to go through an order block, it may have to create another one in the opposite direction in order to push through that. So they got to fake out people right here to get it to go lower. That's really what's happening. This is a strong area right here. You see it bought a bunch of times around this area. So the only way it could get through it is if it create another one in the opposite direction. And now you see why we got this pause right here, where we at right here, because we're back at this order block. There's probably going to be an order block right here. If it wants to go higher, that pushes through this area right here. This is your whole order block right here, or you can break it down, right? Now you see this little series of down candles right here. These are setting up as potential order blocks to the upside. So in this little range, you're going to be looking for something like this. Boom, 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 something like this. If it's going to stop in this area or maybe go to the high of the daily. If it goes to the high of the daily order block, look what's right here. Bam. That's your hourly order block. Bam. That's right near the high of the daily. Boom. Right near the high of the daily. Right? If it wants to go that high. Right? If it goes that high, if it pushes up above here. This is your main area. You might see wicks up to this point, but if this wants to drop from here, this is the highest probability right here. In this area up to here, right? If we see that if we see the price trade above this, this is where we have to expect it to go. This is where you can expect to get your sell from. And now if we get into this area, we know our last point of interest was here. Price comes back down here. That's the first area you can look to buy, right? After that, what is this? Order block. That's the next area you can look to buy, right? We made up move. We made the last down move. We traded above it. It hasn't used this yet. It hasn't used this yet. So because it hasn't used this yet, we know that it's gonna have to at least come back down to try it out and see if it wants to do anything with that on the lower time frame, at least. what'll probably happen is we push up to this area. We might come back down right here, and you at least got a trade to here, right? From here to here, because we haven't used that. And then we might leave a equal highs right around this high, and then eventually trade up above that into that, right? So, everybody got it?
Yes.
Okay. All right, cool beans. All right, glad everybody got it.
Hey, Corey, so I'm processing that in terms of how you're sharing scaling into your trades where you don't put the whole lot at a certain place, but giving it room to move.
Mm-hmm.
Okay, all right.
Yep. If you got a bearish order block, the lower the entry, the lower the lot size. The higher price goes, the higher your lot size can go. If you got a bullish order block, the higher your entry, the lower the lot size. The lower the entry, the higher the lot size. As you dig deeper into a bullish order block, that's giving you more confirmation that you're close enough to where the market is going to move from. But you got to know that the market is bullish. If you are trying to do like a pullback, that means that it's not really bullish, right? It could still be some down movement. So if the market is favoring to continue to sell and you want to try to buy, you can still buy it, but you have to understand like the market is actually bearish. So if I buy this, I have to understand that just because it's an order block right here doesn't mean that it's going to actually move up from here. It means that I can see a pullback. I can try to get in this trade, but I have to trade it tighter. I have to say that because I'm not in a bullish market and I want to buy, I can take the buy, but I have to be responsible and only do a certain amount of pips or protect my trade more, right? Same thing goes if I'm in a bullish market and I try to take a sell at an order block. I can do that, but I got to understand that if I got to protect my trade because I'm not actually in a bearish market. I'm in a bullish market selling a pullback, right? There's nothing wrong with that, but you just got to understand what's going on and where you are and what type of market you in. Because we in a premium market where we just left a discount to a premium now, right? So now that we're going into a premium market, it's still bullish until we reach one of these areas of interest. And if we see what we need to see, then we can try to set up for a larger sale, right? And if we get the larger sale, if we get a sale opportunity, we have to understand like we're still bullish for the moment, but we just need to protect that trade, right? That's kind of what happened to me today on that sale, on the buy, because I wasn't sure. So I used a trailing stop and it stopped me out, but I didn't get in. I didn't hold it like I should have, but it's okay. That's other issues I'm working out, right? I'm working out some other stuff. So, um, um, I think that's it. I think that's it. Think that's it. I don't think I got anything else. And this is usually how the team meetings goes. Michelle, Anais, and Steph, we kind of just answer questions, go over trade setups. Sometimes people drop their charts in, like Chrissy did. And sometimes I will be the one. Most of the time is me talking, but sometimes like Jamal will jump on. Freaking Wale, you'll hear his name. Chin will jump on. A lot of the other guys will jump on. So if you got anything, this is usually what happened. Oluchi, you got your hand up?
Hello.
Hey,
Yeah. Good evening.
hey.
Please, can you hear me?
Yeah, I can hear you.
Okay, I have a question. Can we go back to the daily? I'm
The
sorry,
daily.
I can.
The daily. Okay.
Okay. So I'm saying that the Fibonacci about the premium and the discount. I want to know why you chose the candles for the high and the low instead of the, because I think previously I'm seeing the red line and orange line where you do this.
This to
Yeah.
here, from here to here. And
Yes.
I
And
didn't use this.
yeah, why didn't you use the red, the first red, that's the first high and the low that you drew out?
Right here, because this is the last move right here. There is no lower low in our and if you're looking at the daily, you need to kind of look at about 2 to 3 months time frame, right? And you want to find the highest high and the highest low. If you have a high that's higher than the most recent high, this is where you're gonna look. If you have a low that's lower than this most recent low, that's gonna be your range right there. Right. And you know that because there's no lower low than this within a 3-month, 2-month window. And there's no high higher than this within 2-3 months of your window, right? So this is your last impulse right here before this move was made. Got it?
Yes. Thank you.
And since this is the most recent low, right? We know this order block right here is where we move from. Now you got to find out where it could be going to, right? So then once you got that, you got your order block and this order block right here that sets you up for the next point of interest right here. And until we get above this, we don't need to worry about anything over here in this area until we get it above this. Got it?
Yes.
Okay.
Thank you.
No problem. Let me just show you one last thing. You're not wrong for selling Anais, but it might push up on you. I don't know what your trade setup look like, but you know, you should be good, but you just gotta know, it might push up. Oh, okay. Yeah. That's what's up. That's what's up. Remember how I told y'all that it's always going to be something at these levels, fib levels, right? Some of y'all I showed this to before. These are default fibs, right? This give you projections, and this also give you supply and demand. And this will also line you up to see why and where you get certain moves, right?
Looks like US 30 and SPX even set up for a nice old sell.
Mm-hmm. All right. I'm gonna look at it in a second.
Hey Corey,
Okay.
how are you?
Hey,
How's it going?
what's up, T?
Nothing much, just making dinner. I sent you a screenshot of my US 30 chart.
Where you send it?
Would you be able to take a look at that for me? And
You sent it
I
on
said if we don't break
Discord?
above those highs, could we consider that as the bearish order block
You sent it on Discord?
on the on Discord on your chats? Just a
Right
regular
here.
chat.
This one right here. Yeah, let me look at that right quick. I'm gonna come back to this. It's on US
Thank
30.
you. Yes, thank you.
Is that Miss 200K on the way?
Yeah.
You did the 200K challenge?
Working on it. Yeah.
That's what's up.
I'm not rushing through it though. I'm just taking my time.
Don't rush. So US 30, right? It is at a point of rejection. However, similar to what I just mentioned, profile the market, right? Just the most recent move. Premium, equilibrium, discount. Where did we just buy from? Equilibrium, right? This low, anything below 50%, you are in discount. So it's leaving discount right now, right? You should be thinking sell because it's into the premium, right? But before you can do that, right? This discount needs to find a premium level. So is it setting up for a sale? Likely, right? You can probably get you 200, 300 pips out, maybe 100 pips out the way. You probably can, right? But this is your daily order block right here. I'll use the last up candle in this case, right? We are nowhere near that. So we don't have a likelihood for there to be a major sell-off right there down in this area, right? Let's go on to the 4 hour, right? To the 4 hour. We got equal highs right here, right? Got equal highs here.
Those are the highs I was referring to.
Yeah. Yep. We got equal highs here, equal highs here near the monthly. Then just above this, we have imbalance, right? Imbalance is here to here. And this is an order block as well. So we got a combo set up. We got a 2-piece right here. Got an order block and fair value gap high. I'm not gonna go into what that is right now because it is that's a session by itself. But just understand you got an imbalance right here that I'm drawing up for you. Right? That imbalance start at this wick to this wick. This is the high of the imbalance. That's the low of the imbalance, right? And then we got this equal high. We got the monthly. And we got this high right here. Plus we got this imbalance low. Now, what's right here? That's an order block, right? What you're seeing right now is price has traded above this on this candle. We are likely to see the price come down into this to continue up, at least to take these highs out, right? For the rest of this week, that's what we probably gonna see. If we get,
Yeah, I want her to go all the way to that all-time high.
yeah, that might not happen because we got this imbalance right here.
Right.
This is the area right here where we can see our next lower high inside of here. 3 points of contact, low, middle, and high, right? And if we reject right here, all that's doing is balancing this old order block that's already been traded through. We possibly will see another one right here in order to push it up. If we see anything, right, that's where this or one right here should happen. So that's what you're seeing. Yeah, it might sell. It might sell, you know, I'm not taking away from that, but a wick like this and a wick like this is kind of giving upside momentum, right? And before it drops, it's going to want to take this liquidity out here and maybe out here to retest the monthly at least, you know, at least retest the monthly. And we just turned positive for the week. We just turned positive for the week. Keep that in mind too. So.
Perfect. Thank you.
I'm not saying it can't happen, but I don't see it happening over a larger period of time. And if it does sell, now you can see on the lower time frame, right? We got another imbalance area. right here. To here, this high, this low of this candle. From here to here. This a little 1 hour order block right here. It already used it once. Right here. It's got this imbalance. So if it does sell off, it could push down somewhere in this area. So it's not wrong for you to look for the sell, but this is where we could be going. If we look at the trend, in a little channel here. That's long. This short. If we look at the short term trend, we already did what we needed to do. 1, 2, 3. We should be able to go from here. If it's not, it break it and come down to this trend level. But for the most part, looks like we good to go after getting that news from Powell. But who knows, right? We could get some corona, a new variant come out tomorrow. So
Oh
that
my
could
God, they're
mess
driving me
everything
crazy.
up. That could mess everything up. Jamalacron, Jamal Khalil, Jamal Anacron. I don't know.
Man, you funny as hell, bro.
Who knows,
I
bro?
mean, we already got Deltacron, so
Right. Who knows, bro?
Hey,
Right.
look, yo, Chan, we got another championship, bro. The Bulldogs pulled it off.
But I just got over my hangover probably like 2 hours ago.
Hey, we in here, man.
That's right, go dogs. Don't get me started though. Let's keep this class going. I won't stop.
You're right.
All right. For real, okay. So yeah, at most case, I can see it coming down right here. If it does drop. So look out for this. I'm not gonna trade this. This ain't my time of night. I mean, time of day to trade. So I only trade between 7 and 12, 7 and 11. So, but here,
yeah, I was looking for it to pull back a little bit so I can set a buy limit right in the area where your red arrow is touching right there.
okay. Yeah, that if I was setting a buy limit, that's where I would.
Cool, cool. Thank you.
Bro, I don't know what clicked for me while you on break. My bad. Go ahead. Go ahead.
I'm really to me personally, like as far as the indices goes, I want it back in here. I want it at least halfway here on SPX. Same thing. I want it to do similar. Dang, I already got this drawn up. Oh wow. When did I do this? That must be what I got on my phone, this chart. Anyway.
Bro, that was a beautiful long-term projection. We missed that. I appreciate that. That was awesome.
Yeah. Yeah. That was sexy. That was spot on. Nas too. All of them looking the same way. All of them got this imbalance that is trying to get to. See, Nas almost in it, right? Nas is almost in it. And if Nas hits this, then we might see the drop. We can see it. But if Nas get to this point and break and close above this, we could go to 50 or to 100 or even to this daily order block up here. But this would be my next point of interest for the buy down there on the ass. Remember when I told you I hated SPX? Yeah, man, but I'm telling you, it's you don't have to be afraid of it. Yeah, you ain't got to be afraid of it. Yeah, and then when you trade silver, I was gonna tell you too. When you trade in silver, you need to pay attention to the dollar. Whatever dollar does, silver gonna do the opposite. Silver, gold.
I'm going.
What's up, bro?
Hey, Happy New Year, man.
Happy New Year, brother. What I was gonna tell you about this right quick is once you have the range, the high and the low and the premium, you know where your supply and demand is, and then you can look at the fib levels and you'll see that there's gonna be order block or some kind of market profile, market point of interest at there, right? So this is your supply. There's your order block that dropped us, right? We got near equilibrium, which is 50%. There's the order block to push you through that, right? This fib level, we tried to buy. This almost was an order block to the upside. I mean, this almost was an order block to the upside. Came all the way down. We found demand, right? But this ended up being an order block and it's right near demand. If we look to the left, we know this demand, there's an order block right here. That's why this is right here. This order block right here, near fib level, this near 38. There's your order block right there. This order block right here got used. This order block is near fib level, fib level, fib level, fib level, fib level. There's an order block right here. Equilibrium, there's an order block right here. Expect something right there. Equal high, right? This high right here is pretty much at equilibrium. That's why we got this rejection right here. And going forward, we'll probably see something right here, 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 and up to here. It's always going to be like that. These two down candles right here, if we trade above this, guess what this is going to be? This is going to be an order block. Guess where this is at? This is right at 38, all the way down to demand. So that'll be something to look for on the higher time frame. Yeah, Oren, right? Yeah, Oren is he is the man. He is the man. He's the when I first got into I learned the most from him. Mike Miles, and then Kim, and what's his name? Kim, Oren, Mike. What's bro name? I can't even remember right now.
Lizardo?
Nah, not Lizardo, not Luke. Dang, he just had a kid too.
You talking about off of bounce back strategy? The instructors off of there?
Oh,
He's
John Dollery.
no, I like John Dollery though too. I do like John Dollery. He always talk about vectors. Um, and he's been trading with no, not Tyrone. Why can I not remember? He trades with Dr. Kathy, I think.
Kevin.
Kevin. Yep. Kevin. Yeah. Why I couldn't get that out? My bad. Yeah, Kevin.
Serrano, say him.
Yep. Kevin Serrano. Yep. And those are to me, those are the people you're gonna learn the most from that's inside of the academy. Like I believe Oren can teach you supply demand better than anybody, right? That's how I learned about the 886 and the 12.25 to understand that those were the supply and demands on. I haven't been on one of his sessions in a while because I kind of got my own style. And then I'm gonna give y'all my guy. Like the reason why y'all be thinking like I'm such a guru and all this other kind of stuff is because I paid for IM Academy. I learned from I pay for this. I pay for IM. I'm in another mentorship program. I done years and years of stock studying. I learned from this dude, Tim Sykes. I was in his course. I was in this other dude, Ross Cameron course. I did Q Banks course. I did the ICT guy course. I'm actually in his mentorship. So I've taken everything that I've learned from all these people and just combined it and kind of made it my own.
Those ICT guys are good, man.
Yeah. And like all the smart money guys, like I first heard about smart money in IM. And then I started learning it from the bounce back people. And I learned it. But then I was like, I got to understand where they learned it from. So I got to go find out where they found this at. And I found out that they learned from the ICT guy and then they made up their own concepts and strategies. So that's how I got to this point, you know. So I'm gonna send y'all some of my YouTube playlists. And this is the free stuff that he got on. Now that this the free stuff that he got online that you can learn from. And it'll help you. Like it'll definitely help you. This playlist right here. This playlist right here will help you understand like more smart money concepts. And it's free. So I actually like paid for his mentorship. Like I said, when I learn something, I need to know everything about it for me to get it. So I had to go and dig into it. That's what his mentorship looked like, right? This got all of his stuff content stuff in there. And it's got like all of these videos you can watch about stuff. But, you know, that's something I had to pay for my own, you know, so that's, I can't give y'all that because that dude will go crazy. So, but, you know, you get it because I teach you guys, you know what I'm saying? And I teach you guys the way that I understand it, which to me, you know, once you start watching his videos, you'll see bro is a little off, you know. Bro is a lot off actually, but he
What do you
got a
mean by?
lot of he might just be like almost cussing somebody out on the session, you know. He do just below cursing somebody out. And like the video will be like an hour and 30 minutes, and only 15 minutes of it will be teaching. The rest of it is bro just going off. So
That sounds very hilarious.
it is, but it's annoying. So he's a good he got a lot of knowledge, but he kind of like a troll, to be honest. But take that videos and that'll help you like learn some of the stuff I was talking about. And then
And Corey, I went through every last one of those videos you gave us a dude a couple times, and I would tell you, I really enjoyed it. I didn't find them offensive at all. I was eating it up. I guess I'm used to folk talking any kind of way. I be listening for what he's saying, not how he's saying.
he reckless.
I really appreciate you sharing that. I really do.
Yeah, he reckless though. He get reckless, but he know what he talking about though. So, so like the only thing is, I just want to make sure, Steph and Michelle, you guys got access to both of the Discords. To Kim, I know y'all got to go through game plan and get all your homework and stuff done, and so you can move up to intermediate and advanced and stuff like that. So I know y'all working on that, but I know y'all not in this Discord. So let me send y'all a link for this. So you guys can get anything that I drop. So and you know, in here, just a quick rundown. This the general chat where everybody can talk about anything. I don't really use this, but if you want to, it's a little bot. You can test out stuff on them. If I got anything as far as setups go, I'm gonna drop it in here. I need to get rid of this, but this was some Corona stocks I was looking at. But this old, some other stuff. This if you want to get in the stocks, this like a little basic video. And then anytime we do team meetings, I'll drop the links in here, and then I'll put the recording for it in here too. New York sessions, I'm not doing those no more. I got to get a break. So I don't know if or when I'll be doing those again, but if I do them again, the links will be in here. And then all the old sessions, you can watch those if you want to. They in here too that we recorded. Same thing for the how-to session. I don't know when or if I'll be doing those again. I need a break, but the videos are in here. I always give the videos, I'll usually upload the videos to my YouTube, and then I'll drop the link in here. And then if I give y'all some homework, matter of fact, I'm gonna give y'all some homework. Um, this will be, you can drop it in here anytime, but we usually do the team meetings once a week, so that's why they kind of long. I just wanted to see if y'all can recognize order block since that was the main topic of today. Can't spell. Actually, let me give y'all a pair to look at because I want everybody to look at the same thing. So I know. This is gross. I could give y'all this, but nah. Cat. Let's try USD cat. Okay. Okay. On USD cat, start, don't go no further back than October 21st. And I'm gonna give y'all the range, right? So this is y'all range. This the whole range. Don't go any further back than this. So I'm gonna screenshot this. Oops. That was you, Cat. Yep. October 21st. December 20th. think that's what that was. December 20th, October 21st. Okay, using October 21st range. Okay, there's the chart. And just, tag me in it. And as you go, hopefully everybody is 16 people on. Hopefully everybody should be able to do it. So you should have, and then like when you do it, let me just to help. So it's not all on one chart. Send the daily, send the 4 hour, 1 hour, 15, and a 5 separate. So that way it's not all on there. So kind of do it like this, where you draw the daily out, screenshot it, clear it, then draw the 4 hour out, screenshot it, clear it like that. So it ain't all like crazy looking. Cool beans.
Got it.
Cool beans.
Cool. And this is just study stuff, books, all that kind of stuff. And then if you're gonna do an FTMO challenge, these are the rules and stuff like that. And then if you want to know some of these, I got little examples in here. I'm gonna add some more stuff in there, but that's just for now. All right.
Hello.
Yep.
Don't forget to
What do you think? Hello.
Yes.
Yeah, Corey, what do you think about the forest fund?
Forex. What?
My forest fund.
My Forex fund?
It's like yeah.
I don't really know nothing about them, to be totally honest. I'm only recommending FTMO right now. After what happened with funding talent, I'm only recommending FTMO.
Okay.
Yeah.